The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 26 July 2019. Well, let's talk about the stock market first, as I usually do. And the all-world stock index is testing its early 2018 highs. So markets worldwide, basis the MSCI, is looking strong. But the foreign stock index is lagging, and I also have to say that central bankers on a global basis are pushing interest rates to basically historically low levels, which begs the question, how much lower can you go? Of course, there are already negative rates in a lot of the Eurozone and other areas. And how much can you help a recession when it hits in a, let's say, substantive way when interest rates are already at this low level? Answer, not much. And I think we're going to live through that here in the not too distant future. Well, first up, let's get to Deutsche Bank. Very important. This is from CNBC. Deutsche Bank shares slumped 5% after greater than expected second quarter net loss. Well, I don't know about that as far as greater than expected loss, but all kinds of problems through Deutsche Bank, which has the biggest derivatives position, at least what we're told, of any entity, any banking entity on the planet. And of course, all these banks are interconnected. So, it isn't just a failure of Deutsche Bank that would cause problems. It's all the tie-ins and counterparty risks that go across the board, sweeping through London, through New York, through a lot of other banks in the ECB. So it's a problem, and it's not being totally ignored, but it's yet to be determined how this is going to play out. But be buyer beware, be careful, and we're just going to kind of have to sit back and watch on some of this stuff, because there isn't a whole lot that can be done about it once this cascade of cross currents starts. Just adding on to the same theme, really, this is from Reuters, exclusive Deutsche Bank's problems, derivatives cloud recovery from sources. Deutsche Bank's turnaround strategy rests in large part on shedding 288 billion euros worth of unwanted assets. Three bank insiders said it will take years tying up capital that could have generated income of 500 million euros a year. The opportunity cost of holding the assets, which has not been previously reported, underscores the challenges facing Chief Executive Christian Sewing as he attempts to turn around the bank and restore confidence among investors. Have seen the value of their shares decline by 75% the past 4 years. Enough said on Deutsche Bank. Let's move on. This is again from Reuters. Caterpillar's earnings disappoint on weak China sales and higher costs. Earnings on Wednesday missed Wall Street's estimates, hurt by a combination of weak sales in China and higher production costs and restructuring costs, sending shares lower. Caterpillar is one of those companies that really could get a pretty good idea of what's really going on because of what it does. I mean, these are hardcore physical machines that are used when an economy is expanding. I mean, if you get Caterpillars making more sales and the utilization is at a high rate, that means that you're turning soil, building buildings, taking down old buildings, put up new ones, moving stuff around, et cetera, et cetera. The point being that it's a pretty good indicator what's really going on. Of course, this is through China, and it's not well. And the global economy, as I continue to say almost week after week after week, but bears repeating, is contracting, not expanding. There are problems throughout the sector, top to bottom, nation to nation. No one's exempt. The U.S., yes, the U.S. is better than most, relatively speaking, but not good. Even the U.S. is contracting, even though you hear contrary wording from most of the mainstream financial pundits on the news channels. The truth of the matter is things are contracting. A real quick one from Bloomberg. India has been accused of overstating its growth statistics. Well, what a surprise based on what I just said. Well, you can read the article. Basically, the headline tells you everything you really need to know. Almost all these countries have their own metrics by which they put out their numbers. And just like the United States, which is very, very opaque as far as the real inflation rate and what's really going on, and these revisions and the hedonic indexing and all this nonsense that goes on to produce a happy, smiley face on the economy. If you get down to the truth and rub away all the crap, you'll find out that these things are not doing very well whatsoever. So this is Facebook. This is from Forbes, is already dealing with scams for its own cryptocurrency. This one was a bit laughable to me. At least a dozen fake pages and websites on Facebook and Instagram claim to be associated with Facebook's Libra, which has yet to be officially launched. Buyer beware, be careful. This stuff is kind of interesting. And this is from Bloomberg. I'm doing this kind of for myself and other fellow travelers because, as many of you know, I have been on the, I guess you could say the global speaking circuit for some time, although it's not so global anymore. I don't do like nearly as much travel to Europe and Asia as I used to when the gold and silver markets were really hot. The point being is that think leg room on planes is bad now. It's going to get worse. I won't read you the article. Again, it's basically put up for fellow travelers. But I have noticed over the years the deterioration in air travel. It's just become almost a chore. Sometimes to get to wherever I'm going, and I'm sure other travelers feel the same way. But that is the current situation, and probably still moving into the direction that they're talking about, less and less legroom as time marches forward. Well, looking at energy for a moment, this is from oilprice.com. Job losses hit as shale slows down. Halliburton is cutting its workforce and shelving fracking equipment amid a slowdown in the U.S. shale industry. The oil field services giant said that its revenue fell 13% in the second quarter, and it decided to cut its North American workforce by 8%. The company's share price jumped 9% on the news, with shareholders apparently heartened by the cost-trimming measures. I'm not a big fan of shale, as any of you know, especially people that are paid subscribers. Interesting headline: watch this energy market and watch the food prices and watch the metals. I mean, there's a lot to look at. And watch the stock market and watch all this stuff. But I talk about it every week. But we are in a transition phase, I do believe, meaning that this conventional investments such as the stock market and the bond market are going to have stresses going forward. And the more unconventional investments such as precious metals and the energy sector are probably going to do better going forward. So time will tell. We are under very interesting times. And the truth is, again, that you got to prepare for what reality is, not for what the mainstream is telling you. And this is from the Kitco website. I'm actually featured on here in an interview from time to time. And I do get a fair amount of my gold silver news from Kitco. Russia's total gold reserves top 100 billion as central banks add another 600,000 ounces in June. Russia's gold reserves topped the 100 billion mark in July as gold prices rose and the country's central banks continued to buy the yellow metal, according to the bank's latest press releases. The Russian central bank bought another 597,000 ounces, or 18.7 tons of gold in June, which put the total gold holdings of 2.2 tons as early as July 1st this year. At the time of the writing, August gold futures were trading at 1,417, down 0.7% on the day. So let me just say that the gold market, as I've said over the last few weeks, of course, broke out from the 1350 level, 6-year resistance level. It's broken through substantially. It's been traded around the 1420 level basis the U.S. dollar. And the commitment of traders is not favorable to the gold position right now. However, you can remain in an overbought situation for quite some time. And this is true of the gold market, a stock market, the bond market, any asset can be overbought and remain overbought. So bear that in mind. Having said that, I did a little research this morning before making this update for the weekly perspective, and Gold's open interest has only been at this 600,000 level 3-4 times over the last 5 years. And every time that's been kind of the maximum, and it did start down. A few years ago, it started down rather modestly and stayed at a rather high level for quite some time, and then it broke. And the low point over those 5 years in almost every case I'm citing, which is only 3 or 4, is around 400,000 as the bottom of the open interest, which is a swing of 200,000 contracts. Now, whether history repeats or not remains to be determined. But what I'm trying to state very succinctly is that we really don't know how strong this gold and silver market, particularly gold market, is until profit taking ensues. Right now, the longs are sitting on a profit, at least for the last several trading sessions, meaning anyone that bought below 1350 or at 1350 or 1360 or 1370 or 1380 or 1390 or 1400 is sitting on an unbooked profit. Now, there's trading every day. There's profits every day, every minute. I know that. What I'm trying to say is the big picture, the COT basis, the COT is what I'm referring to. Those are still open positions. And because of that, until that profit taking ensues, we really don't know how much downside pressure the market is going to be able to withstand. Personally, I think that the market is strong. It is a breakout, not a fake out. And we're probably going to see gold be pushed down to a level of, and I don't know, 1380, 1370, I don't know. But that is what I'm looking for. I want to see how much selling takes off. In other words, how many contracts are closed out for the winners and losers. And at what level does gold stabilize? And that will give us a great deal of information on what to expect for the gold market and silver going forward. So I may put in one more item here and close it out. Yeah, let me just close out with this. This is from Gold Charts R Us, paid service. I don't think Nick will mind me. He's showing one chart. And this is, of course, I logged into my account. But this is silver, basically physical silver. These are what he calls depositories, ETFs, funds, and e-funds. And Nick does a great job. I can't really compliment him enough. But if you look over here, I'm not going to read the whole thing to you, but if you look at the bottom numbers here, what you're looking at, the total amount of ounces totaled up here at the bottom is like 1.088 billion ounces of silver. And this is all basically in commercial bar form. And a breakdown, of course, you can see the SLV, the iShares Trust, Zurich Continental Bank, Central Fund of Canada, Sprott Gold Money, Bullion Vault, Ocean Bank. You get the idea. And what I want to focus on to close out this week's weekly perspective is over here on the right side. You may see my cursor, you may not. But right under the COMEX is the iShares or the SLV. And what you see is a 4-week change of almost 35 million ounces to the positive. That means coming into the SLV. So it's not just on paper. There is a pretty substantial physical move. 4-week change is nearly 11%. And that's not the only place that's seeing an input of metal. You're seeing it in the ETFs, ETF securities of about 8 million ounces and 1 million ounces of Zurich Continental Bank, which holds a total of almost 80 million ounces, which is a little more than I've got. And then, which is surprisingly, maybe or maybe not, surprising to me anyway, good old Deutsche Bank, who I ranked on almost every week, has actually brought in positive almost 10 million ounces of silver. And why they're doing that, I don't know, but it's, it's a 40% increase for their holding, which is kind of interesting. And I'll leave it at that. But yeah, a lot of silver movement in the ETFs, not so much anywhere else, but obviously in the commercial side, the banking side, the vaulting side, or the depository side. Pretty good movement, and most of the positive. So I'll leave it at that. Remember, there is nothing more powerful than the truth, not your truth, not my truth, not what I want to believe or think. It's all about reality and the absolute, and there are absolutes in this universe. And one of them is there is nothing more powerful than the truth. Till next week, this is David Morgan, and I will be doing a video for our membership right after this, speaking a little more clearly on where I think these markets are going in the short term. If you're so inclined, please go to themorganreport.com, hit the subscribe bar, take a look at what we offer for the money. If you are an active investor, certainly worth the money. If you're a passive investor, just buy the metal only. Certainly stay on the free updates to keep abreast of the markets and the overall financial ups and downs, and there's really no need to go further than that. And if you are so inclined, I would appreciate anyone that's willing to pass this on and inform their friends, neighbors, and co-workers about this free service that I provide. Thank you. Hello, I'm David Morgan, publisher of The Morgan Report, and as some of you may already know, The Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in The Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.